What's up, everyone? How we doing? Welcome, everybody. Hope you're doing good. How's everybody's day today? How we doing, Ricky? Sonny, good to have you. Sure, we got Lambos up in here. What's up, everybody? How we doing? What's up, 1K? Got some risky swings riding today. See how those things play out for me. I got everybody's channel muted. I actually was going through unmute today because somebody told me that you had a sick XOM play that I wanted to hit, and I'm shit at trading oil. How do I get this shit? Dude, what's going on here? Can you hear me now? Maybe. Anybody there? Oh, we can hear me. And can you see a chart? Did you see my small port account number? We can see a chart. Okay, good. We're getting somewhere now. We're getting somewhere now. Let's see. So we're getting somewhere, I think. Do you guys see an option chain now? You see an option chain, hopefully? We're getting somewhere. Yes, you can see the chart. Welcome, everybody. Apologize for the technical difficulties. I thought I was sharing both screens. I'm apparently wasn't. You guys probably saw me talking shit to Toasty. Yeah, we'll talk AMD here in just a second. I think we're good. I'm hoping 1K. Do you see see blowing ports always, dude? That guy, dude, he had me get long on Rivian yesterday. Yes. Yeah. Nando, I love that you knew it before I even said it, dude. 1K, can you see the option chain? Hopefully, maybe. I don't know what the hell's going on here tonight. Yes, thank you. Okay, great. That means we're getting close. Let me make one more post and we will get to charting. How's everybody doing? Good day in the market, bad day in the market? Was a wild one, I'll tell you that much. I know I got caught off sides at least once. So I'm sure it happened to some others. Hope we all had a good day overall though. Oh yeah, love trading that thing. It's a you know, man, the poor man chips. Man, dude, did you really say that? That sounds like exactly like something Toasty would say. Yeah, and didn't they get downgraded yesterday? Let's pull up the Rivian chart. I love the Rivian chart, dude. It's great. It's only look at my Rivian chart's really good because it's literally just two places where Toasty told me to buy Rivian and it got clobbered, you know, it's smoke, exactly. Yeah. Let's see, so that was yesterday. Yeah. Dang, adjust profit target from 16 to 25 and Toasty is buying the news on that. Shit, dude, I've done the same thing on AT&T. I get it. Okay, welcome everybody. Hope we all had oh, you didn't play Hoodie R. Yeah, me neither. People were asking me about that one in voice chat today. And I mean, I liked the upside trade on it. But I don't know. It just wasn't something I wanted along. And we're gonna kind of talk about, you know, we're gonna talk a bit about contract selection tonight for trades. I think it's huge, you know, and so we're gonna try to do some charting and then, you know, maybe discuss some like options that you could trade on it. Obviously, I'm not trying to like tell you to buy any of them or anything like that. But just kind of work on contract selection because I see it happen in here, you know, just in OOT a lot. Where people will just be in like a crazy out the money contract and not understand why they aren't making money. And so earnings is something that's actually a really like prime example of, you know, people just, they lose a ton of money. There's some like, you know, we can all look at the Greeks, we can all look at delta and theta, and, you know, on most contracts have a relatively good idea of what they're going to open at. With something like earnings, it takes a lot more math to figure out what those contracts are going to be worth, especially weeklies. And so for something like earnings, there's always going to be, and let's pull it up. We'll just pull up Hood because we have it. So we'll just talk a little bit of contract selection today. So I trade on Thinkorswim. For anybody who doesn't know, I personally love sharing on trading on Thinkorswim. And something that I use frequently, this is just the option chain. This little number right here, the 3 M's and this plus or minus number. So what that is telling you the expected move from the market makers on whatever stock you're trading. And so on Hood today, going into earnings, earnings, we had a $1.4 move priced in. You'll hear, me or other people say that, that, oh, they have this much priced in. And so this is an oversimplification of what that is, but basically what they are saying is, if you're getting into Hood, these $12 contracts are sitting somewhere around $1 to $1.50. They're trading as if Hood was $1 or $1.50 higher than it is, so that's that inflated price. You're getting it from IV. You just get these different things baked in going into going into earnings. And so something that I always like to tell people is, if the expected move, and this is again a simplification, and if you're way too far out of the money, it still doesn't apply to you, but if the expected move is met and you're still in a reasonable strike, then your contract's not going to zero. You might make some money. However, it's the ones that end up in the money that it starts to be quite a bit more simple to figure out how much you're going to be up, especially on weeklies, and especially for the later in the week contracts. If you're trading an earning that comes out like a Wednesday night and comes out a Thursday, well, you have to think, what would those contracts normally be worth on a Thursday? And so if you're in, don't get me wrong, Hood made a real nice move today in the after hours, but you have to remember on an $11 stock, a $1.1 move is 10%, which is a really, a large percentage. However, an option contract doesn't care about the percent, even remotely. It cares about your delta, and your delta tells you, how much money are you going to make if the stock moves $1? So on something like earnings, we might see a 10% move on Hood like we did, and even more. You're still only going to earn 1 delta or 1.5 deltas worth of money, So you always need to take that into account when you're trading ERs. Look at that expected move, hope that you end up in the money, and always just pay attention to that. Okay, but with that, just quick little spiel on option contracts, and we'll kind of talk some others as we're charting. I see I got a question. No, so you're asking if it moves more than in your direction, will the IV kick in? No, because, and these are going to have dropped, these will change after hours. The IV it is at its highest right before close. No matter what, that number is dropping, and dropping dramatically. So if you want to know how much you're going to lose, and these, unfortunately, this Greek gets a little bit messed up. If you want to know how much you're going to lose to IV, it's Vega tells you the amount of money you will lose per percent of IV you lose. So that's what I do when people ask me to do, options calculations on it. I go and I look and I say, oh, you got 200% IV. You're going to lose 150% of that IV. And if your Vega's like $1 or or $2 or $3 and you're losing 75 IV, you're going to lose a ton of value in the contract as the IV drops. And so no matter what, when market opens tomorrow, IV will be lower than it was at close, which hurts contracts. You really, really want to end up in the money for them to give you anything. And then it gets a bit easier because, a lot of people who trade options don't actually know this, but one option represents 100 shares. So ballpark, if you are $1 full in the money, your contract will be worth 100 plus whatever value is left over. So it gets much easier to calculate, that's called intrinsic value of an earnings trade if you end up deep in the money. So that's how we use it. But IV will be much lower at open. Yeah, delta is always based on a dollar move. And I don't want to go too much into this because my class later this week is actually on understanding option Greeks. But delta tells you, if you, and these numbers are going to be different at open. Delta tells you how much money you make if the stock moves $1. Gamma tells you how much your delta will increase if the stock moves $1. So delta is always going up, either the closer to the money you get or the deeper in the money you get, until it hits a final value of 1, which 1 delta represents $100. And that goes back to intrinsic value. If you are, 100 delta, if you're $1 in the money, you have $100 because that's your intrinsic value. So delta can never be higher than 100. You can, depending on IV shifts, you can get really advanced on option Greeks and how they will move the contracts. Do you want to look for lower, higher IV when you take a trade? That is very, very trader dependent. If you like trading NVIDIA, you live life in high IV world. If you like trading things like, the oil companies or banks or things like that, you live life in a low IV world. AT&T, Coca-Cola, we talked all those low IV stocks last week. All of those will have low IV. Low IV has its advantages and its disadvantages. So it really just comes down to like, I'm never gonna, well, earnings trades, I will pay attention to IV, of course, but any other time, a high IV it's not going to be make or break on a trade for me. A low IV is not going to be make or break on a trade for me. I just am aware of the effect it can have on any trade that we take. So, if I'm trading NVIDIA, I understand that the delta isn't going to be 100% accurate because of those dramatic shifts up and down in IV. So it gets a little bit harder to kind of understand how those contracts are going to move. Okay, but with that, this is charting, charting class. I'm Dirty River. Thanks for being here. A little late. We went on a ramble for 15 minutes. A little late on that. But we're doing charting tonight. Chardy, the person, had some last minute things come up today. And so I'm just hopping in to cover for him tonight. So I don't really have a plan. I have a couple of things I want to talk about. We're obviously just going to kind of look at some big picture stuff on SPY and QQQ to start. And then that'll only take us, 10 minutes or whatever. And then after that, we will start. I'll just kind of open it up to you guys. We'll try to get through, I don't know, 10 contract or 10 things, as many as we can in the last little bit. So with that, we were going to start with SPY. Obviously, giant move on SPY today. We're down $13 from highs. Well, we were down $13 from highs yesterday. I do, very large sell. CPI, depending what statistic you look at, either was up by 0.1 or was down by 0.3%. So I was actually talking about this a little bit with Tilio beforehand, or before the class, just kind of because I was thrown off. I mean, I've talked with a few people and told them that I was definitely expecting a little bit of downside on CPI. I wasn't expecting this. Nobody should have expected a $13 drop on the indexes from yesterday. There's no reason to expect a move like that. But this one just caught me a little off guard. I didn't think the data was bad. It does show us that obviously there's still some sticky parts of inflation, which the Fed has made very clear to us. But I didn't view this as bad, and so I did go into the day in dip buy mode, which, we got a really nice bounce off the open and everything, especially on tech. But ultimately sold pretty heavy, and then into the end of the day ended up having a whole bunch of buyers. So the main thing I want to take note of today on SPY is really just this daily candle. Big gap down with a candle that basically left nobody winning. It's not a true doji, obviously, because it didn't close flat. Some people might call it a spinning top. There's all these, I don't do the named candle thing. They frequently fail. So I don't like to trade them. But, this is definitely a market of indecision, this is a candle that shows us a lot of indecision. And so for me tomorrow, and we'll see how the day opens. We'll see how the gap up goes. This candle is basically going to be the range that I am watching going into tomorrow. Obviously, a pretty nice candle. You can, if you want, of course, draw a box around it, and a big range, $7 or whatever, we had a big range even intraday today. This is what I'm going to be interested in. I know a bunch of people are going to want to be piling in short because, we had one red day and people love to pile in short after one red day. But the things that I always try to take note of is really just the big picture, today, if we were to just, be coming into SPY, charting for the day, looking for important places to be, well, obviously this 489, 490 area has been huge, it was big breakdowns below it, big breaks above it. Obviously a very, very important level. Next thing that I would kind of watch would have been this attempted breakout that ultimately failed on that FOMC sell. And then the next thing that I would be looking for is any of just these sort of recent highs. So I'd put all of those on the chart. Obviously you want your dramatic low down here. And then these are the SMAs. And I think, you know, I think that these are the, like, I preach them. I teach them in my EMA classes. I teach them in all of my classes. If we are trading around daily or weekly SMAs, they're absolutely vital. And so I'm not going to put this one on here because tomorrow it's likely going to push up a little bit. So we're probably going to end up with this SMA right at that 490. So if we get anywhere down to 490, 150, 490, anywhere in that range, there is zero chance that I will be looking short on anything S&P related or SPY itself. You know, we sold down to, you know, no denying this was a very big sell. We were also trading these prices last week. So that's always important to take note of, you know, and don't get too caught up in, you know, the you know, group mindset of, oh, you know, market is going to die. We were trading here Tuesday of last week. We were at this price, you know, so it's not like market is just dying or anything. So always want to be cautious getting in short. And then I just like to always zoom in and kind of look at, oops, I'm gonna, oh yeah. I always like to just kind of zoom in and look at, you know, where were our levels today? Like, well, we bounced basically where we should have. We can even see when we reclaim this level. And, you know, these are all just the recent levels we've been trading around. When we were able to reclaim this level, not only did it attempt to bounce us earlier, it ended up being definitely a launch pad, you know, for a nice $2 move or whatever into close. Very big run into close. Buyers finally wanted to show up on the day, again, reclaiming some of those previous lows of the day. And so, you know, be cautious short down here. Be cautious swinging short after days like this. As all of you know, I like to, you know, don't chase. You know, there's a big move. If you were lucky enough to be in some swung puts yesterday, great. You know, you made some really, really nice money, but be careful chasing more continued downside until we start to give up some of these levels. And then just to go back to longer time frames, exact same thing. If we start getting up to these highs previously, you know, we can see we took some rejections up here. We can see we took a big rejection on the bounce today. You don't want to be long up here. I'm not saying get your 3-month out puts because we're going to continue dying or anything like that, but you will really want to be cautious going into tomorrow if we do get, you know, gap up 495, 495.50 area. You know, you'll want to be careful just diving in long on that. Wait for some of that confirmation for a break upside. Something that Tilio and I were talking, you know, market was ready for a pullback. Market was ready for a sell. We'd had that sell on FOMC, but as all of you know, I mean, we did the lecture with Tilio and everything. That was a wildly easy dip buy. You know, that was an easy one to buy the dip on. Today, it was an easy dip buy off the open, but it wasn't one to just hold long and swing for the fences, kind of like this one was. So we want to watch this range from today. So that's what I'll be looking for going into SPY tomorrow, you know, basically looking for call bounces anywhere from that 490 to 492 area. And then looking for some put rejections if we get up there 496 to 498 range is kind of where I will be looking. And then just to talk on contracts a little bit, always at the money. If you're trading SPY and you can afford it, and you're close, you know, depending where you are, you know, if you're 10 cents from in the money, you can always go a strike out. But trading those in the money contracts is always just going to provide you safety. And when you move in the money, the moves just become more predictable. So it's easier to not get scared out of a trade. So next one we're going to talk today, QQQ, obviously tech. And then we'll do basically the exact same thing that we did. We know 430 been a really, really big level. It was hard for us to get over it. Can mark some of these highs, can mark these previous lows that we had down here. You know, a lot of bounces off this 425 area. And then the main one that I really wanted to point out here, 425.28 was that daily 20 SMA. So kind of goes back to the exact same thing that I was talking on SPY or anything else. If you are trading a stock and you are trading around those daily SMAs or weekly SMAs, take trades off of them. You know, today QQQ was an interesting one. We see it's 425.28, but if we zoom in, you know, our bounce, like our low of day on QQQ was 425.57. So, you know, we ended up taking a very, very big bounce, you know, off of that area. Nice $3-4 move, $3 move, it looks like, on QQQ into close. So again, tread lightly short down here. If we give up 425, if we give up this SMA, then obviously, you know, you can look to play some shorts, whether down to the 420 area, or if we ultimately get a really nice sell down to 416. But again, that's being greedy. You know, like QQQ is 439 yesterday and it dropped as low as 425. So a $14 drop on that thing. Don't necessarily expect another $14 drop. You know, trend is still up, market is still very strong. Breadth was expanding last week. We obviously had a big pullback on it today and yesterday, but be very, very careful jumping in front of that tech train short. You know, always look at these bigger pictures. Is this an ugly weekly candle setting up? Yeah, it's only Tuesday. We're trading at levels we were trading at last week. You know, we can see where these bounces came, lining up pretty dang good. So that 425 for me is really going to be my line in the sand. Not to say there won't be, you know, some great put scalp opportunities tomorrow. Maybe there won't. But I will be treading very, very lightly short down here. Today was definitely a day on both tech and SPY. It was not where I was going to be swinging short. I know everybody wants to swing short after big red days because they can be dramatic like they were today. But oftentimes, especially when, if you look at the big picture of the market is bullish. So even on a big red day, it's always risky to be you know, swinging short on most anything in the market. So with that, that's kind of my feelings on tech and SPY. You know, just wanted to keep them a little bit simple. Oh, we can actually check out, if you guys want. I know more and more people are trading this. IWM, big thing that I've been looking at here. Talked about it even with Toasty yesterday. You know, he's obsessed with small caps, and he was saying, you know, oh, you know, small caps are ready, big breakout, blah, blah, blah. But to me, we are still in this multi-year long range that IWM has just been trapped in. And so, you know, my comment to him yesterday was like, no, we're going to reject 203, something like that, and end up dumping, you know. And so we did ultimately end up dumping. This is a breakout I don't think occurs until we get a rate cut, and likely we could see some downside after the rate cut, but it's these small caps and the whole, you know, the Russell 2000 that is really going to benefit from rate cuts. They can start to put money into their companies again, which they can't afford to do that right now. But so for me, I'm really hoping again we get another pullback to, you know, this 189 area, and then this is the weekly chart. This is the 200 weekly SMA. It is giant. You know, when you break below it, you tend to sell heavy. When you break back above it, you tend to buy heavy. You know, it's a very, very important level on the chart. So when we're trading anywhere near this 200 SMA, if we, you know, and I'm not saying we're going to get another $4 or $5 pullback on IWM, but if we can get down to this 190 area, it will again offer a very, very nice trade to potentially, you know, catch a bounce on it. However, it will remain low risk. Because your stop is going to be any sort of dramatic selling you see under that 200. So you're really only going to be risking $1 of downside and then ultimately looking for that, you know, $6, $7, $8 move upside. So IWM setting it up for a really, you know, potentially another nice bounce. Obviously big failure off that weekly chart yet again on the sell-off today, but you can see selling down that 20 and that 50, and the 20 and the 50 that are pretty solidly pointed up, you know. So again, not where I'm swinging short personally. Maybe I could understand why somebody would want to and risk, you know, want to risk this downside move, but we can even see it, you know, just looking at the candle today, the market had decided it was not, it wasn't ready to give up at least the 50, you know, 20, obviously much smaller bounce on IWM into close, which just goes hand in hand with the weakness with small caps and, you know, the things I lovingly call shit stocks. They you know, they will never bounce. They will never be as happy until we get those rate cuts going. So with IWM, I'm really hoping for some more downside to the, the 190 area to maybe get in there long and catch a swing on it if I can. What's the number one holding in IWM? Believe it or not, it is SMCI. So, there's that going for it, which is, at least I think it's number one. Somebody can double check me on that if they want. But if you go through, a bunch of the other names aren't known. And, obviously SMCI was not the largest holding, but with it 1,000%ing its market cap this year, it became the largest holding. So yeah, and so like, it was just the holding in there that, like, I mean, SMCI has been in IWM for 2 years or something like that. So when you zoom out and look at this chart, the IWM buy on SMCI was somewhere back here in the 40s, 50s, something like that. So when you have a run to $800, and your market cap, like, I mean, God, that's 2,000% return or whatever if you're in it at 40. Your market cap gives you the 2,000% return, then you quickly become the largest holding in an ETF, Okay, and with that, those are my little spiels. Let's talk some charts you guys want to talk. I did see one that was brought up earlier, so actually I will start with that one. And it's AMD. Everybody watching it right now, everybody trying to catch the bottom, everybody trying to catch the top. And so for me on AMD, I've posted this in TradeFlow. I've kind of shared it in, DMs with a couple of people. Even Shark watching a very, very similar thing on AMD right now. It wants to make a move. My hope, and this is what I mentioned to Matt, I'm not sure if he's in here tonight, but what I mentioned to Matt yesterday was I was looking for a pullback. I wanted to see that fake break, and I even talked about this with Tony too. I wanted to see this fake break below here, and then I wanted to see it get some explosive buying. And so we got that nice break below it. I know that it did end up ending the day red, but still a very strong day out of AMD off the lows. And so for me, I'm still just watching this form right here. You can call it a pennant, you can a flag, you call it whatever you want. To me, it's two trends. I don't like to name things. We have this daily 20 sitting right in the middle here. If you're looking for shorter term trades, a reclaim of this 20, 172, 173-ish area, look for a trade up to that trend. If we aren't able to stay above it, you can look for a quick short trade down to this trend. And maybe you catch the breakout, maybe, break up or break down. Maybe you don't. But offering kind of a nice point to trade off. I won't be taking a trade on it. I did trade it today. On this break back in, I entered somewhere, these aren't my normal indicators. I entered somewhere around here and then got out of it on this consolidation before obviously it made the really nice move today. But I wanted to be involved once we had reclaimed that trend. And so, with AMD, just all contracts on chips are juiced, can pay really nice on that quick little bounce. So I got out, I think, on this candle somewhere like that. Obviously ended up moving much nicer without me. But as most of you know, I hate entering in the middle of a range. And no matter how you add this up, this is a range. And then one more thing that I want to point out, and there will be some disagreement with me, and that's fine. I consider the last 5 candles on AMD all inside candles of this one. So this candle is what's really holding us, and I know that some people will disagree, and so I'll kind of address it. A lot of people say, well, there's wicks outside, so that makes them not technically an inside candle. To me, when I'm looking for inside candles is I want the body inside of this candle. So when all of these bodies are inside of here, we know the market is really just deciding which way they want to do it. So while I don't like the entry, like an entry at close today, I don't like that entry on AMD. Long, you're fighting the 20. I also don't like it short because it had such strong buying today after the gap down. So I don't love it short here, and I don't love it long here. How I would rather trade this is look for a pullback to this trend to get long with a stop below it. and then look for the, $5 move or whatever it is, $4.50 move up to this trend. If you have runners, maybe you catch the breakout. On the other side of it, if we push all the way up to this trend and start seeing, buyers falter, maybe some attempts over it that just aren't holding, then I'll go the exact opposite way and I'll short it. So why I like to do that is if you enter calls here, your stop is way below you. If you're long here, you need to have your stop, $5 below you. If you're short here, you really want to have your stop above this trend. So it's the other way, $5. And you're only looking for a $4 move either way at most, $3 move. So your risk far outweighs your reward. So I don't like an entry here. I would rather be in calls here with a stop right below me, risk $1. Same as here, short up here with a stop right above me, risk $1. And then, you're risking $1 for $4, or you're risking $1 for $4. That is a great risk reward trade. But the entry right here in the middle of the zone after 5 inside candles, to me, is just not a good entry. We've seen it the last few days. If your entry is not good on AMD, you're getting smoked, So for me, I'm waiting for those better entries personally on AMD. But that's what I'm watching on it. Yeah, Ricky, exactly. And that's something I love to see a trade in SOXL. It's great. It's the poor man's chips. Maybe you don't want to trade AMD contracts because they're wildly expensive, and you can trade some, at the monies or close to the money SOXLs and still catch a really nice percentage move on it. So yeah, great one. Great one. Oh, there we go. I got people asking about AMD. No, like I said, I don't like AMD longs here. Obviously, if you're buying time, that's fine, but you still need to have a stop planned somewhere. I like to buy or short at extremes just to reduce my risk a lot more. Nick, yeah, AMD longs maybe. If we pull back here, I'll be in them. ARM, the ARM SoftBank situation, I am very undecided on it. I need to read more about ARM and see if they're a company that is worth, the move on it is just insanity lately, if anybody isn't familiar with ARM. But this chart to me really screams some more than SMCI, more than NVIDIA. This one screams to me chasing AI hype. This does not look like a constructive chart for up or downside, I'm not telling you to get out there and short ARM or anything like that, but I think we really need to see how the SoftBank situation plays out. And then if you're into these kinds of company, you need, go see if you think ARM is a company worth running for the long term and see if it's worth it. There was no denying it put up some huge earnings, but you have to ask, whenever we see these kinds of things, just the insane run on AI and run on chips, and God, you even got the Fed president talking about all the CapEx going into chips. And so not all of them will last through all of this. So you always need to ask yourself, is this a company I want to own long term? And I don't know enough about ARM to really make a judgment on that. I think it's offering some really great momentum trading. I do think it's building horrible habits for people. Just a couple of days ago, we had a guy and, ARM's trading at 120 and he's in 160 calls. And, and he made a ton of money, and I'm super happy he made a ton of money. It was 100% no way around it, a terrible trade. You should never be buying $40 out of the money weekly contracts. That's just so sketchy. Did it work in spectacular fashion? Absolutely. But it is not a habit to form. You don't want to expect a $40 move on things. In fact, you want to assume there is little to no chance that move comes. So be careful getting caught up in the AI hype. Teresa, great question. No, if you are a beginner, don't touch SPY, don't touch QQQ. In my last lecture, I actually talked about low IV and just some slower moving stocks. I highly recommend trading those instead. Are they going to give you the 1,000 percenters that SPY can sometimes give you? No, but they're going to trade much safer. You're going to have substantially less risk on the table, and you're still going to make a really, really nice return without having to, freak out on any sort of volatility intraday. There's a buddy of mine that I've been working with a lot, and he's we do one-on-ones once or twice a week, and he got into some QQQ calls up here yesterday. And that sell, it came out of nowhere. I never did find some news to back it, maybe some treasury stuff, but he got into some QQQ calls, and he's used to letting his contracts breathe a little bit more. However, if you're in, 1 DTE QQQ calls and you get a $2 move against you, your contracts are demolished. And that just won't happen on other things, So if you're a newer trader, I can't emphasize enough, stay away from Tesla, stay away from NVIDIA, stay away from SPY, stay away from QQQ. Yes, they're cheap contracts. Well, SPY and QQQ, the same days, that can give you a nice reward, but you have to remember most people lose money trying to trade same days. So it's really just not worth it. Yeah, Ricky, Soxel moves. Well, that's what I say. SOXL moves really nice. Oh, can we check NVIDIA? Can we check SMCI? There's really no charting those things right now, but yeah, why not? Let's check out NVIDIA. So you always just want to be on the daily. Obviously insane strength on NVIDIA. Don't be short above this 700. Wait for those pullbacks to buy. And then what I do when these things are just live life at new all-time highs, I always go to the 4-hour and I just look for points where we stalled out and then got a nice move. Obviously, mark any new all-time highs, mark anywhere big rejections started, anywhere big bounces started, and trade these levels on it. So then when you go into your intraday trading, you can say, oh, where do I think things are going to bounce? Where do I think things are going to reject? And kind of base your trades around that. I know that a lot of these people out here right now trading NVIDIA, trading SMCI, trading all of that stuff, they're just holding and swinging for the fences. And that will end. That will quit working eventually. And they're going to get demolished. Even NVIDIA today was, huge run on it. And then I know for a fact, because somebody DM'd me, he held for this $20 pullback. And it was like you were up giant and you just kept thinking it was going to bounce while it sold $20 against you. You got to trade levels. You got to know, even today, and this is what I told him, he bought NVIDIA at open. He caught this entire run up. And then basically what I told him was, here's a nice little range at a top, failed to break out. That's your stop. Once you're below there, just get out, And so you always need to pay attention to those like intraday consolidation points, because they'll tell you, should you keep holding? Should you stop out? What is it? But for me on NVIDIA, these I just charted them how I would chart them any other time. These are going to be the levels I'm watching going into tomorrow. As I look, I'd probably have one right around here too. But for me, it's chips. Like, don't jump in front of that train or anything. Don't try to be the hero that makes money on NVIDIA puts. Nobody's impressed by that. Yeah, SMCI, same thing as NVIDIA. We can pull it up, but the thing is just insanity, But you do the same thing. Hit the 4-hour. We'll zoom out a little bit. Hit the 4-hour, look for any dramatic lows. Look at that, just perfect double bottom bounce. God, what a rip on that thing to catch a $50 move. Look for recent highs, any sort of rejections, any sort of supports, trade around these levels. And then, obviously you will have pre-market highs, pre-market lows. And then we've marked them here because they're the only levels we have. Those previous days, high and lows are always important, but trade levels like this, and then trade those pre-market highs and lows. And then if we start pushing into no man's land, look at the whole numbers, the 810s, 815s, 820s, and then look at if you're into fib extensions, any of those kinds of things, and they can work really good for you. Well, Sonny, we already did IWM. Yeah, Disney, man, I completely forgot. I haven't even looked at that thing since after earnings. What's it doing? Oh, it's well, as it stands now, it's 3-day rule in us. So we got 3 inside candles. I would basically be watching this candle's range going into tomorrow. not swinging short on this thing, or not swinging long on this thing where it closed today. That's for dang sure. I would honestly likely be looking for maybe a little rejection off of here. But for anybody who doesn't know, 3-day rule, Shark's the one who made it famous, but it is a long proven idea of when you get a very large move on an equity on the back of news, which earnings is news, give it 3 days. The move likely comes on the 4th or 5th day where the market decides, does it want to continue to push up, go visit these highs, or does it want to sell off a little bit and do some, some more price discovery if you can. And so for me, not long on Disney here. However, if we get this nice breakout, heck yeah, I'll be long on Disney. This is, we talked about these low IV, that I'm sure that IV is just absolutely dumped back to where it should be on Disney. It's sitting up there well over 100 and it's down to 28%. So nice, safe contracts to trade. Stop outs can always be tight. Nice eye, actually. I will likely be looking into trading Disney tomorrow. We can even zoom into it on the 4-hour. Get a couple more levels. Again, I like to just mark the top of the range so I know it's there. I know we do have that 50 cent, but that'd be a nice little pay on Disney if you could even get that pop. This looking pretty interesting little zone. We're kind of the middle of the range to say, hey, if you are long, you probably want to be stopping out. Well above all those SMAs. I mean, I like Disney. I hope we get a nice pop out of it again. I would like to catch that move back up to these highs if I can. But again, if we are seeming to be unable to break out of here, I'll likely be looking for that short down to the 109 or so area. Walmart a tricky one right now because it's got a split coming. So oh god, is it coming in like just a couple of days? Oh no, that's earnings, huh? Walmart a tricky one with that split news coming. Oh, bad day out of it today. But making it pretty obvious. You guys all know me, man. I just look for any sort of range that I can see. Obviously we're in a pretty tight range right here. Today was the well, not tight, few bucks, but today was real first attempted push down below this recent consolidation area. But I'm definitely a dip buyer on Walmart all the way down to even 168, wouldn't want to be long up here necessarily, but could be a really nice dip buy down to here. Oh, there's the split date on the 26th. Is that just, wow, 6 days after earnings? Well, Walmart could actually start putting in some moves here over the next few days. But definitely dip buyer up here, shorter up here. Where we pushed up to today, that was obviously going to offer a pretty nice short entry on it. Well, I'm actually sort of intrigued by the old Walmart chart right now. Give me just a second. I just want to look at some other things. Long ways off that band. If we can get a nice bounce out of Walmart and a breakout here, I would look for it to go push that band up there, 170, 250, if we can get the breakout here. Otherwise, trying to short it up here would obviously pay really nice. But Walmart could put in some moves over the next, 10, 13 days into earnings, into the split. So nice eye on that one. I obviously don't love entries middle of range. It is a little tricky having that 170 big round number kind of in the middle of it. But for me, I'm probably a dip buyer on Walmart. Google, let's check it out. Google's one I've been trading Google a lot lately. Let's get a new one. Let's just clear this here. Yeah, we'll get rid of those bands because they're ugly. Yeah, this has just been sort of the bane of Google's existence, has been this 20 right here. It's like they chart price everybody should have on the old charts. As we can see, bounced right where we would want it to today. It's kind of setting up similar candle as SPY, where nobody, nobody won the day. Obviously, bears won overall with the big gap down, no denying that. But nobody really won the intraday trading on Google today. Gave up its trend. This big trend's been given up too. I've been trying to catch that gap fill now for the last week and a half with no luck. Google, I don't really love a long entry here. I'd be watching this 20 right here. It's just been so hard for it to get over. And don't get me wrong, they grinded it up with it, and then we finally got the pop above it. But that's really where I would be looking to get long. Otherwise, I would be looking dips down this 143 area to try to catch a bounce. But if we start to see some selling, because we know that Google hasn't been, one of the standout performers in tech lately, it is one that you could, if we get a bounce up to this 20, like, yeah, I mean, even today we got a nice one. Got a really nice one right there. If it bounces up to that 20, I would honestly kind of be leaning short on it still. However, if we start to see some explosive buying in tech over the next couple of days, it could get to exploding above it. So if you do short it up here, be pretty cautious for sure. And then target down to these lows, 142, 143 area, just kind of basically the sell we got today. Don't expect it to give up, 142 or anything like that. So if you are getting short down here, don't look for some gigantic move or anything like that. Try to get your few bucks out of Google and move on with it. Thoughts on DraftKings? Not really, just because it has earnings, so it's hard to say. Wow, held up surprisingly well. I guess down 2%, so I kind of take that back. But still held up surprisingly well considering the rest of the market. If you are trying to catch that IV run up, I do, DraftKings is just, it's a little bit of a tricky one just because everybody always thinks it's just going to have these huge earnings thanks to like Super Bowl betting and stuff, but they don't, those aren't taken into account in this quarter, so I don't think that will be reflected in the earnings. And then it typically disappoints, I know the betting is just getting insane in America. I saw that it was like some ridiculous amount of money was bet on the Super Bowl. And so, it's not something I want to bet against. I'd be cautiously bullish above this 40, but you'd really need to dig into those financials and see what kind of money you think they're going to be making. However, if we can get this trend break, I guess we don't really even have time to get it before earnings. Oh, it's before market on Friday, looks like. If we can get a push above this, though, you could get that nice move up to 44. Otherwise, I'd be looking to short it down to 40. But like I said, I don't like this middle of the range stuff. I don't want to, risk $2 up to make $2 down, and I don't want to risk $2 down to make $2 up. So for me, just kind of a tricky one. Marbell. Yeah, this is another one that, man, I thought that breakout was just, we were watching this one on the weekly. I've really been thinking that breakout's coming, but for now, we stuck. Not to say there isn't some really nice trades, but I'm sounding like a broken record right now. Long down here at the bottom of this range, short up here at the top of this range. We'll see if it wants to get the breakout or breakdown heading into earnings, but this thing is just rife with disappointment, excitement followed by disappointment over and over again. So for now, we just want to be careful. Even looking at the weekly chart, we're just printing inside candle after inside candle on this thing. So be cautious for now. Obviously, this weekly candle doesn't mean anything yet. It's Tuesday, so we'll see how it finishes up. But for now, buy those dips all the way down to 66 and short those rips up 72, 71 all the way up to 73 probably. How'd that thing do today? Nice buying into the close. Nice buying on everything into the close. Oh, nice little million volume candle. 0 sellers. That's a good one. And more there. But yeah, this could have been a nice riskier entry with the wide stop for the longs down here, but I guess it did print a double bottom there. For me, I just not loving an entry on this one right now personally. Too much disappointment on the upside for me to want to take the riskier entry long. I'd really want to see it pull down to here to be getting long on it. Ooh, Nick, Disney can burn, huh? You don't like Disney? Hood, no point in talking about Hood. Just put up earnings. I mean, we gotta, this one likely we 3-day rule after this one if we don't get either a big old pop or a big old drop tomorrow, let the market decide what it wants to do. Don't go chasing this move. I mean, things up what, $1.20, so yeah, just shy of 10% after hours. Was up real nice. We'll see what it does into the open if it wants to kind of go back up to those highs. I think someone said it put up pretty good earnings. I didn't care enough to read about it. Yep, revenue beat, EPS beat, strong start to quarter 1. That sounds like something that hopefully we'll get a pop out of it, get a couple days of consolidation. We'll be up here. Oh yeah, that's just at a risky point too to be getting long. Well, I won't be diving in long to Hood tomorrow or nothing like that. I would definitely want to see it over that. This is one of those ones that grand scheme thing is demolished. It ain't doing good. So you want to watch this 1320, 1350 area that we haven't been able to crack over for, well, a very long time at this point. I mean, this thing's just been throttled. Even all the way back to what is that 2021, this thing hasn't been able to get its feet under itself. So pretty smoked on Hood right there. But take those gains. Grizz gave a banger. Boeing, the bad news magnet, huh? Well, basically in an untradeable range after getting hammered by bad news over and over again. I like to trade Boeing. It frequently sells on news that means nothing and then takes a really, really nice bounce. I'm undoubtedly a dip buyer on Boeing down here to 200. Could even take this riskier early entry to a 170, maybe half position with the plan of adding down here if we do get a little pullback on it. But seeing it down here towards the bottom of this range that it's just been, trading in for 3 weeks now or whatever, maybe even more. Down here towards the bottom of the range, start to look for those bounces. This is actually looking more and more constructive to make a nice, continued move. Don't get me wrong, nice $10 move on Boeing. Nobody's going to be sad about that kind of a thing. But nice setup down here at these lows. Let's see. Gap was filled. Old gap way back here was filled. So those dips should be bought on Boeing. Other entry would likely be a break over this 20 SMA here. Not looking for a huge move, maybe targeting 212 all the way up to the 200 SMA. And this is a thing that does make big enough moves that you don't need to be right at the money. You can buy a little bit of time, go a few strikes out of the money and see if you can catch that move. Coin, what's Coin doing? Crypto is on a moon mission. Coin not keeping up with the moon mission though. That's weird. I mean, nice move on it, but you got Bitcoin cracking 50K and Coin nowhere near highs or anything like that. That's definitely interesting to take note of. Not a lot to say on that. 140 obviously acting as a pretty good support for us currently. Yeah, 140 acting as pretty strong support. Has been previously. I would basically be pacing some trades around this 140. If we can see that, hold of 140. I don't like that the 20 is here, but with this thing, how it moves, that can be all right. Hold at 140, you can look to be long with pretty tight stops below it. Even, I mean, if you want a looser stop, obviously these lows back here, 137. But that's likely a point where you should either be looking to enter calls or just stopping out as opposed to, if you took the early entry, take the stop out down here on the chance it wants to fill that little gap. With how Coin moves, it wouldn't be out of the question for it to flush that $8 or whatever it is down to here. But riskier entry over 140, safer entry over this daily 20 and look for that pop back to 150. Otherwise, break down here. Oh yeah, and you even have the previous high back here. Nice one, Coin. Break down to that 137-ish area, and you can likely catch that gap fill
happening pretty quickly if it comes. I won't say I'm overly bearish or bullish on coin, so I think you should be ready for any situation. If we do get this pullback to that big major trend, obviously you want to be trying to scalp some calls or getting some calls off of there. But for now, I'd be pretty keyed into that 140 level and sort of base my trades all around there. Boeing, we did. Yeah, February 26th for the Walmart split. Ooh, John Deere, what's that thing up to? I wanted this one back here. Oh wow. Yeah, I see what you're saying there, Ricky. Filled the gap. Setting a nice double bottom. Yeah, John Deere. Great trade right there. Super low risk. Might have kind of missed it today. But honestly, reclaim that 380 with a stop below these lows. It is a pretty wide stop, but reclaim that 380 with the stop below these lows, and that's a nice place to be getting long. $6 upside for a couple of bucks of downside is not too bad. So nice one, actually. But if you are getting long, you're fighting the trend. There's no denying that. We even got the more major trend right there, but then I'd probably slap it somewhere around there. This would be the other trend. We can see if we can maybe get some consolidation here, pull back to here and catch this trend break with the support bounce. That would be the really, really nice entry on John Deere. But plenty tradable down here in this zone. Nice one, Ricky. Tesla, who cares? Terrible company. No need to be trading that thing right now. I mean, it's not bullish. It's not bearish. It's just sideways. Way easier moves to be caught. Financials on it are beyond hideous. So tough to want. Like, I'm not a buyer of shares. Me and Tilly have both been preaching that. Not a buyer of shares on Tesla here. They guided poor. They have poor financials. I think Tesla is not in the best shape. So for me, all Tesla trades, I mean, if it's like, of course you can catch some technical bounces upside, but for me, you should be shorting pops. Any pop on Tesla up to really this 194, you should be trying to get short on Tesla. It is not the place to be a bull in the market right now, at least in my opinion. It's even still something, if you're into it, it is just consistently high volume that's just ruled by sellers, and it's obviously not these like super high volumes, the 200 million days or anything, but trading 100 to 120 million shares a day, and the sellers are just smoking them every single day. You'll get these bounces, but the sellers always wind up winning on this one right now. So Tesla definitely somewhere that I'm not, that's one that I ain't looking to dip buy on. Yeah, love the Googles on Fridays. LABD, is that a real question? Oh. Yeah. Biotech is scary. I mean, this thing, it's pretty apparent that it's not doing much of anything right now. Don't get me wrong, that's basically a 10% range plus on that. So you can scalp some moves down here if you're into those slower movers. Biotech, just a one. I mean, as you can tell, not in favor in the market right now. Like this thing's demolished, I mean, this thing's down 90%. So, biotech not in favor with the market currently. If I was looking to get long biotech to try to start seeing some of these bigger bounces up to these levels, I'm going to need to see these SMAs reclaimed. It's putting in a base. No denying that biotech is putting in a base here. But if I'm trying to get long on this, I'm not comfortable until it's up here, really. Obviously you can take trades down here, but for me, that's not where I want to have my not where I want to have my money. Is this which one? But what's this? Does anybody know the other one? Oh, J-Dub's already on it. Oh, this is the bear one. This is the bull one. I didn't think that one was bear. I thought that was just some like weird leveraged one. Does anybody know it's in LABD? Biotech EVS, LABD. Well, this is the short one. Okay, so I mean, I was wrong. Apparently they are buying biotech. I didn't know that. I thought the healthcare stuff was still not doing very good. You know, we had those nice bounces last week, but I was incorrect in my assessment there. Um, uh, if that is the short one on it, then apparently they are interested in buying it. Wow, that one's really moved. So when you're looking at these kinds of things, I like to pull them up together. If anybody doesn't know, and obviously I didn't know, so let's look at them. I like to pull them up together and say, oh, they did a reverse split on this. So that was probably some buying going into there. So this reverse split here for anybody who doesn't know, if on a normal split 1 to 20, I'm reading, I pulled this up. If anybody ever wants to know about these things, just go on their website. Can you guys see what I just pulled up there, hopefully? If you ever want to know, you know, the movings of these things, the expense ratios, which are going to affect it, any sort of rebalancing that occurs. Is it a daily rebalancing? Is it anything like that? What sort of divergences do we have? So as I'm looking at this more and more, knowing that the bullish 3x, and this one's not 3x. I think this one's just the short version, which is why the moves aren't quite as dramatic. This is just the short version. For anybody who doesn't know, 3x, they're just leveraged ETFs, so you can get a bigger move on it. But if we are seeing this down here, and this is just holding down here, not where you want to be getting long on the short side, as weird as that sounds, because you can absolutely be risking holding into a reverse split, which is not where you want to be. They apparently decided to split it here 1 for 20. So for every 1 share, it turned into 20. And so you want to be cautious on something like this down here at these lows. If you don't get a bounce, you can be, or which means a drop, then you can end up in a trade. If you're in shares that reverse split, it's a 99% probability you will never see profit again. Yeah, XLV, thank you. I never remember what that one is. And yeah, I guess XLV, we still got a nice push out of it. The last I had been looking at it was right here because I think I wonder if he's still in here. Nando he hit a nice one on the healthcare sector. Maybe it was CVS or something like that. And then I kind of quit watching it. I hadn't seen that we got this nice bounce on it. Thanks for opening my eyes, everybody. Oh, I see we're a little past 6, so thank you everybody for coming. If you got to get out of here, I appreciate you being here. What causes gaps? Just the movement in after hours trading. You know, it's when the market reopens, you know, they either buy it or they sell it heavily. And then when you get a gap, you will notice that you see them on the daily, and that's because they take none of the after hours movement into account. So while when the market closed yesterday, we closed at basically 501. When the market opened today, we opened at 494. So all of that data in the middle is ignored on the daily chart. If you ever want to see a more fluid movement of what happened overnight, pull up the futures, you know, ES, things like that. And while we see on the daily, we had a big gap down, in reality, it was these candles right here that gave us the move. So it's just that pre-market selling or buying or whatever it is, you know, it can go both ways. And so that's all it is for a gap. Yeah, Lampos. That is why we dumped. That is why we dumped. Shop's a hard one for me. It's actually one that I've been talking with Zach a little bit. You know, no surprise to anyone. He was super bearish on Shop. It got clobbered. Him and I were talking Shop back here. This was FOMC time, and Shop is really going to benefit from reduction in rates. I think that. Oh wait, Shop, their earnings was today. So they had earnings today, pre-market, on top of a bad CPI report, and they missed. It looks like really. Oh no, they beat. The estimated EPS was 22 and they hit 34, so big beat out of that thing. Sales beat, And if anybody doesn't know, I'm just pulling this up, live news down here. It gives you the news that's happening with these things. So big beat on EPS, big beat on sales. Expect the gross margin to increase 150 basis points over Q4. Man. So I think that you need to give it a few days. Wow, Shop. Who asked me this? Down pointing chart asked me this. Shop, huh? I mean, I would personally be trying to catch a bounce on this thing. When you get the double beat, I'm sure that if I read deeper into the report, there was a reason that it sold heavy, more than just the day today. But yeah, they didn't like something in the earnings report. Obviously, didn't like something in the conference call either. Wow, but I would honestly be watching these lows here into tomorrow also. Let's look at it on the 4-hour. Man, you guys have brought up some sweet charts today. Already taken a big pop in those after hours. I mean, I would likely be looking to kind of buy these dips on Shop all the way down to, from 77, try to get long half position, maybe add the rest at 76 with the stop below these previous lows. But ER is going to be the tricky thing. We want to see if it wants to level off for a couple of days and see what it wants to do. But buy these dips down to here and then short this pig down here and try to see if you can catch that run all the way down to 70. Oh yeah, ER was not on Thursday. ER was today, pre-market. So you missed that. You missed that train. What do I think about AMD? We actually went over AMD earlier, but for me, it's all about this here pattern right here, whatever you want to call it, these two trends. I'm long at the trend here. I'm short at the trend here. If we break out, I'm long. If we break down, I'm short in simplest terms. Right on, Ricky. Thank you. Yeah, Ultra. Thank you everybody for coming in. Why is there gaps on the 5-minute? There's not, unless something was halted or it's extremely low liquidity. IVR, this one's like, I mean, it's another one that's kind of tricky to chart and talk about, because the whole mortgage situation in America is such a tricky thing. And this is all backed on, mortgages and everything like that. And so it's a difficult one to trade on technicals. It is much better traded on fundamentals. Obviously, technically looking at the chart, nothing to be bullish about here right now. Shorter trend is down. More major trend is down. And then if we were to zoom out even bigger, you can see the last time we were talking, more major trend is still way down, so a lot of these mortgage backed things, as we saw with the bank stuff, is last year, is really, really suffering. So not somewhere that I personally want to be getting long. They are going to put out that weird earnings that they do as like, when they do these, it's not an ETF, but when they release how they're doing, not something that I'd really be looking to get long. If you were, you could risk that long bounce if we pull all the way down to this 8, which I would personally expect us to pull down to this 8. However, you're really fighting, something that people love to sell. So be cautious there. Yeah, thank you everybody. I appreciate all being here. Yep, gaps on the 5-minute. Whoever asked that, tell me to pull up a chart with a gap on the 5-minute and we can talk about it. But gaps don't occur, generally speaking, on the 5-minute unless there is extreme volatility happening on a low volume stock. Okay, well, if that's going to do it, thank you everybody so much for coming. Great turnout tonight. Great questions, great charts. Really, really good one. Yeah, it probably does move pretty, yeah, thank you, everybody. Thank you so much. It probably does move a little bit inverse of the 10-year because, obviously rates heavily affect mortgages, and so it probably does move a little bit inverse of the 10-year. But I wouldn't necessarily just try to trade it with, some of that, you know, uh, with that, we can pull it up. I mean, I got a couple minutes and I gotta go make some dinner, but, because, you can say that it kind of moves opposite of the 10-year, but while the 10-year was pushing, so was it. So you do want to be slightly cautious trying to trade it with things like that. As we can see, nice inverse today, but also it was dumping, 10-year was dumping, it was ripping, 10-year was ripping. Uh, and so, yeah, you want to be, you do want to be cautious with those. And then also, the 10-year, I know people try to talk about it and trade for like, you don't want to do TA on the 10-year. You don't want to do TA on those kinds of things. They trade exclusively on fundamentals. So sure, some technical stuff can work, but that's not how the big money is trading 10 years or anything like that. Okay, thank you everybody, and we will catch you all tomorrow. Have a great night. Thanks for being here.